If you want to trade price action successfully with a very high win rate, you have to know about this pattern that I'm about to show you. This happens all the time. You can trade it on the lower time frames as a day trader, and I will show you exactly step by step how this works and where to find the trades. I have shown you many times in the past about the market rhythm, that the market alternates between impulsive and trending waves, and that's how trends unfold. However, there's even more to that, and for timing the trades and for finding the right entry point, we can use a very, very important tool, and we can use the concept of market symmetry. So let me show you what this means. First of all, we need to find a so-called A and B C move. So we have our impulsive wave, the corrective wave, and once we have that, we have our 3 points. A, which is the origin, B is the end of the impulsive phase, and then C is the retracement. And once we have that, now we're going to apply the Fibonacci. In TradingView, you go here to the left bar, and then Fibonacci retracement, it's the shortcut Alt and F on Windows. And what you want to do is, depending on how you want to draw it, I draw it in this way. You start at the B point and you trace it all the way back to the A point. What I do, open the settings, and you can extend the lines. Where is it? Extend the lines right, and then that's a little bit easier for us. And the market symmetry is a concept that works really, really well. And what you can see is that those retracement phases, the moves back to the C point when we are going against the trend. And I will show you in a moment why we know this is against the trend and what tools we can use for that. What we often see is that those levels are often holding 61, 50, and 38. That's very important. If you're drawing Fibonacci's in the opposite way, they may be reversed, but it doesn't really matter. And then what happens is very often the next phase, the next impulsive phase, based on market symmetry, is going another 100%. So we're going from 50 back to 100 and then to 150. And that's exactly 100%, which means it's exactly as long as the initial trending leg. So that's very important. Obviously, it's not always 50, and I will show you a few variations in a moment, but this is essentially the key here. The 50% retracement goes to 150. As I will show you in a moment, 61.8 will often go to 161.8. 38 will often go to 138, and that's exactly why I set up the Fibonacci's in that way. It's just much easier in that way. And what we can then do is, there are many ways on how you can approach this on a trade entry basis. A lot of traders, if you're aggressive, you're going to look for entries on the C point. You want to see where's the market finding support on which of the Fibonacci retracement levels, and that's then where you get in on a pullback and on a trend following trade. Other traders, if you are maybe have a little bit of a long-term approach and you don't want to get in as early, you could decide to go in when the market breaks the 100, which means the market is then making a new higher high. But that's a little bit up to you, and it's a personal choice. So what often happens is that when we get the C retracement at this area, we often get a candlestick or a lower time frame pattern. When we zoom in, let me do that, we can see that is a tweezer pattern. We have two candlesticks that both have very long candlestick wicks to the downside. The tweezer typically should have two equal lows. In this case, it's not, but we have two very strong candle rejections. Then the next candle also has a very bullish close. What you will see is when you jump to the lower time frame on such candles, I use the replay tool on TradingView, and then we can go from the 1 hour to the 5 minute. What you often see is that you get patterns, the patterns that I've made so many videos in the past about. Here we have signs of maybe an inverse head and shoulder. We have some type of neckline here, and that could be your entry, right? You could wait for the market to break the neckline and then get in on the entry. If you do that, you could get in with a very, very high reward to risk ratio, because in that case, you can tuck away your stop loss behind the neckline. You can go all the way below the right shoulder, which in this case is very close to the low. And then you can see if we target the 100 level, that's 1.8. And then if we go, let me zoom out a bit, and if we go to 150, which should be this one, right? We have 4.5, which is a very exceptional and a large reward to risk ratio. Another tip, what I would recommend, activate the daily pivot point. So we have the daily central pivot point, and it falls right into where we have the neckline. That's the daily central pivot point. This is our neckline. So that's great confluence. And what this means is that if we get on the other side of the pivot point, it means we have rejected the pivot point and we have established a bullish pivot point formula, or a bullish pivot point sequence better. Sometimes you will see that the market is not actually breaking and getting below the pivot point, but sometimes we move into the pivot point and then bounce away from that. That also happens, as I've shown you in other videos in the past. So you could easily use this in a multi-time frame approach, and then you just wait for a breakout. As you can see here, we had a break and retest of the daily central pivot point. It's a very, very important area that many traders are watching. We also have 967, which is also a round number. Here we are running into a little bit of a trouble, which is 97 or 0.97. It's a round number, but that shouldn't be such a big problem. We are trading with the trend, as we have identified on the higher time frame. We have our ABC, right? The big A push is our impulsive wave. The weak B2C move is a very weak corrective wave. I've made many videos about this in the past. And then we keep going higher. We break the 100 level, and then we continue on to 150. And this not only happened in that case, as I've shown you, and we can go back to the higher time frame. We can go back to the 1 hour. This happens all the time, and the market symmetry is something that is really, really important. Let me just exit the replay mode a little bit. And then you can see this happens all the time. We have seen it. This is the one we observed first, right? A, B, C. But we can keep doing that, right? We have another move. We have another impulsive wave. We have another corrective wave. And we should see a Fibonacci here as well. Not always will you get a Fibonacci retracement and an entry, but very often you will. So what you have here is we draw it, and then you can see another 50 retracement, right? We go from the top to point C, 50. We don't immediately break it, but we do afterwards, and then we keep going to 150. In that case, we overshoot it and we go to 161.8. And what I would really recommend is that you don't worry about missing a few points here and there. You go for what is, well, in quotes, safe. In trading, nothing is really safe, and there will be times where this fails, but you can see the move to 150 is very reliable. It happens very often, not always, but I would recommend in the beginning, especially when you're just getting started with it, focus on the first move, focus on what is reasonable based on market symmetry. Here, for example, you could get in on the lower time frame. Maybe you see a pattern here, right? We have a nice deceleration pattern. We come in, decelerate, have a rejection, then an engulfing candle. We didn't break the level right away, and some traders may scale out of here, no problem. In that case, you can see we have a broader pattern. We have a lower bounce. I made many videos about the lower bounce. We have the breakout, and then we push higher into the highs. Another very good example here on the Euro US dollar. And the market does that in both ways, right? Not only on the way up, but only on the way down. A, B, we have here our retracement. Let's see what we have. In this case, where we have it, a 50 retracement, go all the way to 50. And then in that case, we go to 50. Again, we overshoot it. We go to 160, have a bit of a bounce here. Eventually, we move lower. But again, focus on what is, again, in quotes, safe. Nothing is 100% safe, obviously. And there will be many times this fails. But I would recommend really paying attention to it. We can even go back. The market did this many times on the way down as well. So we focused on what has happened in the last 2 weeks. Let's look at what the market did before that. We have here A, B. Sometimes the retracements will be a little bit longer, but if you have been watching my videos, you will have seen that I talk a lot about what makes this an impulsive wave, what makes this a corrective wave. In that case, you can see we have a 61 retracement, right? We go here to 61, and then we go to 161. We eventually move lower, but this move, the A, B, C, D move, is over when we hit here the 161. We retrace a little bit, and then we can regroup and look for another trading opportunity if it comes. Can see we have A, B, C. We move to 161. Then we go to 161. Again, we overshoot it a little bit. We trade sideways afterwards. We know that we have turned around afterwards. We have looked at it, but very, very important pattern. Again, you can see here we would have had a inverse head and normal head and shoulders. Pretty much we have a lower bounce, lower highs. I'm not sure. Let's activate the daily pivot. You can see we have a perfect central daily pivot point rejection, the lower bounce as well. Very, very bearish setup overall. We know we are trading with the trend. We know we are trading with a market symmetry. And again, this is really an interesting pattern. I would recommend. This is only the Euro US dollar. I didn't even cherry pick this. I opened the chart, and this happened on the Euro US dollar over the last months. So that was very obvious. A lot of traders are using Fibonacci's, but it's not only about using Fibonacci's and how many traders use this tool. It's about the market symmetry. And market symmetry really helps us understand what is going on behind the scenes, because there's a reason why we have the impulsive wave in the length that it is. And then very important, the selling wave, the corrective wave, is in a specific ratio, right? If we would see that the corrective wave, the selling period, would go on much deeper, it would mean that we have way more sellers than what we are actually seeing here. And then we probably wouldn't see the move that we will see afterwards. We will probably see a much shallower move because there are actually a lot of sellers in here, and it's not as clear as here where we have a long trending move and then a short corrective wave. If we would have an even shorter corrective wave, what would this mean? It means we have a lot of buyers, very, very few sellers. So the next push is going to be even larger. And again, it doesn't work 100%, but this is the market symmetry. That's a very, very important concept that is helping you to understand the buyer and the sellers, the ratio between the buyers and the sellers. How much can you expect from what is going to happen next? And then you can anticipate it. And what is really helpful about this is that it helps you with your targets and also with your trade expectation. How much can you expect from a given market move? A lot of traders, they struggle with exits and they often get too greedy. They don't want to close their trade when it's reasonable to close a trade and they hope to hit a home run. Or other traders may be too fearful. Maybe you're coming from a losing streak and you have lost your confidence, so you're not really able to let your winners run normally. But if you see that based on market symmetry, this is what is very likely to happen and that is what is likely to expect, you can approach your trades with a lot more confidence and also improve your target placement. So I hope you enjoyed this. I hope you learned something from it. Let me know in the comments if you did. Also, check out the comments for all our current specials and offers, trading courses, and our new mentoring. I look forward to hearing from you. Have a good day.